How about that? That's that song's been on repeat for me all weekend with my headphones on, staring at the terminal. Uh, yeah, it's a great song. It really is. It really pumps me up no matter what. You might think I'm crazy, but like I actually do listen to that kind of stuff on like I'll choose a song and it'll be my song of like the week. And yeah, I'll just keep listening to the same thing over and over and over again. But gets me into the zone and the code flows nice and smooth, the business logic, all that good stuff. So thanks for tuning in. We're back for another trading week. It's Sunday night here in Toronto, Eastern Standard Time, 7 p.m. With SPDas, Elliot Wave Theory Trader. And yeah, so we've got we're back. If you're in GMT and all the other time zones, the AEST, CET, we've put out a trading schedule for everybody so that it's nice and easy to follow along. That's on X, and you can add that to your calendar. I'll drop an iCal link or whatever that's called, so you can easily schedule those. Those are available in the portal too, coming along nicely. I was going to give you a little demo of the portal. I'm going to do that probably tomorrow. But if you're a holder, you should have access to be able to hook up your wallet now. And the white paper feedback is almost ready. We're just hooking it up so it's secure and nice and compatible with the Web3 mentality. So that unless you want to tell us who you are, it'll keep everything nice and secure and anonymous for you. There's probably going to be some sort of a token system in terms of preventing spam and stuff like that. So initially, we'll probably just like give everybody like a certain amount of tokens to be able to leave feedback. That way, everyone can actually be thoughtful with their feedback, and it's not just going to be people spamming it, which I've seen happen quite a bit with other platforms that launch and don't consider that stuff. So yeah, looking forward to sharing all that stuff with you. We've got a bunch of APIs hooked up over the weekend that we custom wrote for different central banks. Pretty much every central bank is hooked up now, and you could essentially talk to them and um, pull analysis for your trades. Also, the time series API is now almost ready, so that'll be coming shortly after. It is a bit more compute, so we want to make sure that we get all the tokens and everything sorted out, and of course get that feedback from you from the community to make sure that um, you know we don't just launch stuff without that consideration. So yeah, if you just think you're at, yeah, you know what? Let's just get down to business. SPDOS is patiently waiting. It's we're 7 minutes behind now, and of course, just keep tuning in for updates. I'll make sure to be pinging everybody as things progress. We've got a really nice action-packed week, and yeah, apologies for all the dog hair on my sweater. Um, just been hanging out with my dog a little bit today too. Went for a nice walk. Yeah, okay, let's get the action rolling. We got SP Das on the other line. Elliot Wave Theory Trader coming right up.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.
Hey, SP Das. SP Das, are you there? Oh, let's see if this working here. SPDas, are you able to hear me? Oh, I see. One second, one second. Got my microphone.
Yes, I could hear the last words.
All right, awesome. Yeah, I had a bit of mic trouble. I've got like 1,000 devices plugged in here, and I don't even want to get into the details, but the trading floor is all yours.
No problems. Thank you so much. And once again, welcome everyone. We are just about beginning a fresh week now. Tokyo Sydney overlap, 26th, 27th of Jan. And let's get started away with the daily chart for Euro flashing up on your screens right now. I think we are quickly approaching the last few trading days, five of them for the series to end. And okay, let's go through the larger degree counts first, and we'll come back on the hourly chart in a moment. But it's important to know the larger degree counts, as always. I keep on stressing. So it's five waves up at minor degree, followed by a corrective decline which lasted for about 2 years. And it's not a surprise because that's a daily chart. There were a lot many alternative counts when the correction was going on. But finally, it turned out to be an ABC where wave B was a bit complex WXY within itself, a 3-3-3 structure. That was wave B. That was a 3-3-3 structure. And we have an impulse wave C unfolding as five waves. Mid of Jan, we've seen a bounce coming up right across the Fibonacci 61.8% as well, and things are now looking to turn bullish, and that bounce was also joined by the RSI bullish divergence right from 17th of October. Each new low with the price action was, in fact, specifically from 22nd November, each new low was not followed by the RSI's low as well. So that was a very strong indicator of a potential turn just around the corner. We've got that now. All right. So the larger degree move is on the upside from here. We potentially got wave one, or just about one more high, maybe today, and so wave one is potentially complete. We should be waiting for wave two corrective decline before the third, fourth, and fifth wave resume higher again. Going back to the hourly chart, if you look at the wave story there, now that's what we predominantly did last Friday. And minute degree waves 1, 2, 3, 4, and potential 5 are just on the lookout. Now, within the minute wave 5, I think we are wave 1, 2, 3, that's an expanded flat. So that could be a lower degree wave 4 in the making. All right, that could be sub-minute wave 4 before one more push higher towards wave 5 up there. But that's an expanded flat under construction right now, and A, B, and C. And if you allow me to look at the RSI, it should be around 40 as we speak. It is 48 or 46, 48 right now, and maybe around 40. This is a good level actually. Normally wave 4, if it is doing correct, if we are doing correct, then it should bounce somewhere around the current price action without dropping to a 437. So 437 should hold, and things should start moving around on the higher side. If we go by precision as to what the extensions could be, then let's do it here. All right, that's the precise target. Somewhere around 552, I think, and that coincides well with the previous resistance as well. All right, that 530 and 550 not too far away. Watch out for today's intraday targets on the long positions could be 550, 530 zone. Okay, so that's the wave story for Euro USD. And from the trading point of view, we have been holding long positions since what? That I remember that 19th or 20th Jan low 250 60 zone. That was all most of us got in there. Aggressive traders might have got in earlier as well, but we have been holding it for about 200 300 points now, and should be continuing. We should continue to hold for a positional trade, okay, with a stop around. I still don't recommend stop loss move higher. It's still technically incorrect to the stop loss. We've got wave 1 of a higher degree. We should have wave 2 of a higher degree now. All right, I'm going to just extend these trend lines as we begin the week. The trend lines are very powerful in terms of it gives us a lot of confidence about the trading zones actually. And once we know that which trading zone we are lying, the price action is it gives us a lot of confidence to trade in that zone, in the direction, correct? So maybe one more high intraday today, 550 zone, and then we should be ideally going for the rest of the 4 days of the week. I think, all right, this is what is expected out of this week. Tuesday, Wednesday, Thursday, and Friday. We need to see a corrective decline. So expect a corrective decline to be mostly covering this week, except for one more high left today, possibly. All right. And that brings us to the end of Jan, that is 31st of Jan, if to be more potentially correct. That leaves us with the early Feb rally in the euro, which is looking high probable at this point in time. All right, so hold on to the long positions. If you're a long-term trader, if you're a short-term trader, you might want to book profits, uh, maximum profits around the 550 zone, and then wait for a corrective decline, and then go long again. All right, we'll catch up all the trading waves. In fact, we'll be also trying to cover the counter trends. We will be issuing counter trades as well for the corrective wave coming up. All right. So dollar index story now. I don't see 8 cap. Let's pick up capital.com. We go by the daily chart wave stories. Let's do the larger degree counts first quickly. It's on the opposite side, wave 1, 2, 3, 4, and 5. And ABC, wave V was a complex corrective wave, and the ABC corrective structure extended through the 61.8%, just above that. It's a good sign actually, and we were just in time to recognize the pattern here and the potential turn and reaction should be there. We've gotten the reaction now, and possibly we've kind of got the first wave of one larger degree. We are now looking for a corrective wave, and thereafter it should be the steepest drop in recent times for the dollar index. So all the rally, which was which bulls have covered actually the entire zone between 99 and 110. It's all going to be corrected on the other side. Now, if we go back on an hourly chart, I think it's a lower degree wave 4 in the making right now. There you see wave 1, wave 2, wave 3, potential expanded flat wave 4, and possibly wave 5 lower. One more, one more low, one more print today before the corrective wave kind of resumes. All right. So if you allow me quickly, you can do the or wave is enough. I think that is the lower degree structure. We've got wave 3, expanded flat wave 4, and another impulse wave 5 in the making. All right. Trading point of view, that's the wave story. Trade story is that we've held on aggressive shorts from 110, and conservative shorts were taken around 109, 20, 30. So for short-term traders, any push below 106.86 could be a short-term take profits, maximum take profits around just below that 107 handle. For positional traders, it's a target which can be kept open. Now the stop loss, according to the 8 cap source, our stop loss was at 110.30, but according to the capital.com price action, it's just below 11. The high is 109.90, so you might want to keep your stop just above that. Maybe 110.2030 is good enough. Okay, but we don't recommend any stop change for now because we still need to see that corrective rally materialize, and you never know. I mean, the entire zone is for the bears to for the bulls to print a corrective wave. Ideally, it would be around the 61.8% zone. So we should be seeing prices back towards 108.70 or close to 109 as well. It's going to be a potential corrective wave higher this week. Let's see how the price action and the story is unfolding. All right, the interesting story for gold now. Okay, we've last Friday, I think we took aggressive shorts already. So the wave structure is really telling us a wonderful story that uh, minute wave B circle here is potentially complete around the 2785 zone. All right, and that was
Very
exactly
nice.
where our limit order was also in place. Remember, we went long and then we took profits on the long trades, and then we've now entered
Yep.
shorts around that 80 zone, stop loss 2801. We are targeting 2735 now. So 2735, could be seen today itself. We are already 67 now, just about 30 points lower, maybe 2735. Once it hits 2735, then it will be quite a confident trade on the south side from there on. All right. Okay, the larger degree structure for gold is as follows. We are looking for a corrective wave seed of minute degree to drag prices lower somewhere in the region of 2500, 2450, and but we'll come back to this story once we get the price action confirmation here. What we need to see here is on the shorter time frame. What we need to see here is a break below 2735. Five waves are completed on the last wave as well on the upside. Now we need to see a drop through 2735 and a pullback, possibly again towards the 2770 zone, and then continue lower from there. This is what is expected out of gold price action. The sooner we get there to 2735, it's going to be a wonderful story. Let's have a quick look on the 15 minutes time frame, because we we can count one, two, three triangle wave, four and five very clearly here, very clear. And on the right hand side, we are still looking for further confirmation of a potential impulse. It's still not very clear here on the right hand side if we got an impulse or not. So ideally, to be on the very safe side, 2735 is what we have decided. We need to see a price break of 2735. All right. Now, first, as a trading, now that's a wave point of view. Trading point of view, if you've taken aggressive shorts around the 80 zone, and if you want to take some short-term profits right now, you can do that. But 2735, certainly you should be taking profits in today. So it's up to you. You can book short-term profits right now and wait for a corrective rally and then go short again, or just hold your shorts until 2735 and then do profits. You can do 50-50 as well. But as I keep saying, always please make a habit of placing your stop loss correct and keep booking short-term profits. That brings us that brings money home. One, which gives a lot of confidence, and point number two, it also gives us a chance to re-enter on the retracement or pullback. All right. So story in gold is potentially on the short side for the. I think it's going to be for quite a few weeks now. I mean, once the wave is clear, once we get the first wave around 2735, it's going to be for the rest 4 to 12 weeks actually, where we can expect bears to remain in control. All right, so that is gold, and we'll come back to the indices just in a while around the New York session or the London session. We'll have a quick view though. That's the future. So the futures are still, I don't know if the price, it's a spot market or future market, but 44 to 300 something is where the market's closed on Friday, I suppose. So if we go back on a daily chart and try to see if there is a signal, it would be interesting. So we don't have a candlestick pattern yet, but you know what? Today's today's day candle will give us more idea about what signal is underway. Okay, we need to see. We need to just wait and watch how the price action is unfolding for in the next 24 hours. So we leave it until the New York Open, the Dow Jones. Let's pick up the points now. The consolidation continues, but so I think on Friday we were quite close to 107.24, I think, yeah. And what was decided was if you are holding long, and the story remains the same actually because there's a corrective decline here, ABC. If you're holding long positions, your stop loss should still be firmly just below that 99 handle, nothing below that, because the sideways action continues, and you never know if this guy plays tricky. That could be an impulse lower and then corrective higher, potential wave two in the making. So we've got to be very careful in holding the long positions. Uh, Either you book profits on a higher level and then wait for a corrective decline again. And if you think it's going to be, might miss the bus, then hold on to a long positions that we have taken last week around this level. I think it was 101, but the stop loss has to go firmly below 99. Structurally, one more high was print, so you never know. The fifth wave has fallen short of its target or it is still underway with a potential wave 4 in the making and one more thrust wave higher. I'm not ruling out the thrust wave higher at all. I'm just saying be a bit cautious on the long side with a tight stop loss, which is recommended in every session. Ethereum should be on the same lines, and stop loss has to go below 29 for sure. Ideally, even if you keep it around 3000, it's absolutely no problems at all. Sideways action continues, and you just got to be a bit careful in your stop loss. Don't leave it open, please, thinking that we are certainly going to go above that. It's a probability game. We know that it's a probability game, so we cannot take chances. Either 29 or 3000. That should be a stop loss. I'm just recommending the stop losses right now. Targets are not changing. For Bitcoin, it is 115. For Ethereum, it is 4300, 4300. I think for Solana, it's just about the 300 mark. But again, stressing on the stop losses, please. Now, this Solana, the stop has to be around 229. I remember the stops very clearly. So have your stop losses around 229 uh, because we don't want to leave anything on chance. That high was already print. That was the first target, 284, all right, on the daily chart. So you never know if wave 5 is complete and Solana could be underway on the south side as well. That's the reason you need to keep your stop loss intact with a potential upside target of 314. if you look at uh, this RSI has not produced a bearish divergence before reversing lower. All right, and prices are now around the 55. Maybe some more consolidation before the last leg rally produces divergence. That is a good scenario. So we are still not ruling out on the upside targets for all the coins that we've seen so far. I think Ripple should be on the same lines. It's it's better than others. Back to 3.0, and that's where the stop loss recommended last week, 2.8. Kindly hold on to your long positions with the stop around 2.8. That could be a lower degree wave two in the making before the third wave resumes higher again towards 3.7. All right. So those are the stories as we move on to a fresh trading week. I think Euro is now picking up after an expanded flat wave four. Expect by the time we are back in the London series or London session, I think we should have seen a top, potential top, and reversal as well. All right, so let's bring this session to a pause here, and we'll be back after in a few hours to touch base or continue the story where we are leaving right now in the London session. And I'll hand over to Igor right now. Back to you, Igor. Thank you.
Amazing. Thank you, SPDas. Always a pleasure. And I'm
Thanks.
always humbled by your amazing experience. And yeah, it's just
Yeah.
awesome.
thank, thank you, brother. Thank you.
Thank you.
All right. Bye.
Alrighty, folks. I gotta jump. Got a lot of spinning plates right now, but that's the way I like it. That's the way the team likes it as well. We'll be posting more updates tomorrow, the day after, the day after, the day after, the day after, pretty much every day. We've got like a whole itinerary for you. And yeah, see you back at London session, 5 a.m. EST. And the schedule is posted on X now that we're going to stick to that for this week. There might be a few updates next week in terms of um, we might move London to 2 a.m. for the actual open, and we might move New York Part 2 for 7 a.m. EST. Uh, um, but we'll keep that open for now. It really depends on how far we progress with the actual portal access for everybody. So like the white paper page and the site you're seeing now, pardon me, on solana.forexlens.com, that's pretty much a placeholder. Those widgets there and everything like that are integrated in the actual portal. We're just kind of showing you a preview. Of course, the the wallet access and everything is still there. I'm sure you saw the post earlier today of the the LLM demo, the preview. We'll give you a better preview of how that works. It is connected to the trade ideas. It's connected to the time series data. It's connected to the unified market narrative that we're building from all the live sessions going back to 2016. And now we're integrating with the new live sessions that we started from January 1. So all that is being considered in the analysis that you're getting when you're talking to it. In terms of the branding, some people were confused about some of the community updates. We're not rebranding ForexLens whatsoever. We're not changing the token whatsoever. That was actually in reference to the branding of how we're going to call the different AI agents that we have, right? So instead of like unified market narrative, we have like a way cooler brand, and we've got all that with the marketing team and branding team. They've been cooking on their end, and we've been reviewing things and really not just having a good time with it, but also like it's pretty serious work. We want to make sure that it really sticks out and catches people's attention, as well as stays professional, a little bit playful, but more so on the professional end. Of course, we're institutional traders. We've been trading for almost a decade together. SPDas, IT trader, myself, and the other traders that are on the team as well that are doing analysis. The live sessions that you're seeing so far are just a preview. Got other traders just itching, waiting to start. As we get the avatar system more in place, you'll see them coming online as they want to use the avatar system. They do work at institutions and they just want to keep their identities, not revealed. Fair enough. I understand. I know what that's like, and it definitely is, something that I respect when people want that. We'll be releasing the avatar system for the streaming for everybody to be able to use it. If you want to use it on your own sessions, etc., it's going to be a little gift. Of course, it's not going to have all the features that we have, but it's going to be substantial enough that it'll be practical and useful. And of course, we'll take requests and stuff like that to open up some of the extra features as time goes on. But that's not the priority. The main priority is the trading. The main priority is the AI. The main priority is the token, the DeFi, and the XR, the combination of everything. Stay tuned. We'll be back at 5 a.m. EST for London Live, and of course, IT Trader, Smart Money Trader is back at 8 a.m. EST for New York 1, and SPDas is back at 9:30 a.m. EST for New York 2. As I've said before, if you're just tuning in, SPDas does Elliot wave theory trading, which is the classical style. IT Trader does ICT, smart money, institutional style trading. He finds it's a more new style of trading, not really, but so to speak. He finds the institutional footprints, and our whole thing is to put power back in the hands of retail traders, and of course make it easier for professional traders to analyze, spend less time having to analyze charts with trusted providers and services like ours. With that, if you're tuning in, if you've been here and you're finding value, please don't forget to like. Please don't forget to repost. That helps us a lot. We really want to get more people to start seeing what we're up to. So yeah, it would be a huge help if you did that. And see you back tomorrow. Take care.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com.